Good morning, everyone. Welcome to an episode of the Mizuho Week Ahead. I am Boon Heng, market economist at Mizuho Bank. This week's theme is Talking Turning Points. Last week, US President Trump signed directives to ease the impact of tariffs on automakers. To be clear, the orders prevent stacking but does not absolve from the absolute pain of tariffs. On US-China relations, reports from China that US officials are repeatedly expressing willingness to talk to Beijing is a welcome sign on the possibility of trade talks. Though the Commerce Ministry stating that their ongoing evaluation may also imply that a near-term kickoff of talks may not be forthcoming. Furthermore, with US President Donald Trump saying that India wanted to make a deal so bad, should have optimists worried about the possibility of such comments being levied on China, which will upend any trade talks. US economic data last week also affirms weaker economic activity amid increasing jobless claims, lower job openings, and a GDP contraction in Q1. The silver lining was a better than expected ISM manufacturing rate, though it remains in contraction on aggregate. Last Friday's non-farm payrolls also came in higher than expected at 177K for April. That said, the unemployment rate stayed elevated at 4.2%, and payroll figures in the prior months were downwardly revised. Meanwhile, the Bank of Japan's rate pause last week was as expected. Governor Ueda's dovish remarks, displaying concerns about the growth impact from tariffs, will worry yen bulls. Consequently, the yen underperformed last week. In EM Asia, the Bank of Thailand cut rates last week by 25 basis points. That has left open the room for more cuts, as it removed the allusion to the stance being robust to the risks ahead. Moody's also downgraded Thailand's sovereign outlook rating to negative amid significant downward growth revisions. In Taiwan, Q1 GDP outperformed on strong exports demand from front-loading, and the Taiwan dollar also gained as hopes of US-China talks and favorable risk-on inflows into equities gave tailwinds. For the week ahead, the Fed meeting will not be one that see any turns in policy, as they will keep policy unchanged. The Fed is confronted by opposing duality of adverse income demand impact on one hand and potential price shocks on the other. In Asia, we expect Bank Negara Malaysia to keep their policy rate on hold, as Q1 growth at 4.4% year-on-year is not yet at the territory for rate cuts, given that household spending and manufacturing growth remains supported. In Indonesia, we expect Q1 GDP to print at 5% as agricultural and manufacturing sector indicators show robust activity. That said, we have revised overall growth down to 4.6% for 2025 on trade headwinds due to the ensuing need for importing LNG from the US. In the Philippines, Q1 GDP print may be a silver lining, as we expect a slight acceleration of growth to 5.7% year-on-year from Q4's 5.3%, as the industrial sector growth is expected to offset a soft services sector. All in, markets will continue to swing from upbeat sentiments on hopes of turning points in trade talks to worrying about the economy taking a turn for the worse. In any case, some turns can be abrupt and slow turns may be no less painful. For more information, please refer to our research publication or contact your respective sales desk and our apps. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.